Yo, what's up, everybody? Good morning. Good morning. Good morning. Oh, the link. Hold on. Hold on. Yeah, everybody in a. Here you go. There's your link. I'm already like super up already. I bought it to open when we tapped open last night. It's I'm up 52,000 since yesterday across all the accounts. Market hadn't even started yet. Ain't that some shit? That's like some super hype, guys. What's up, y'all? We're gonna try something new today. No music. Let's see how I listen to your own music. What's up? Oh my gosh, man! Today's such a good day. Is there a good long opportunity? Oh my man, I already took it. So this is me up right here. Like I'm at like 52. This is the apexes. Total across. I'll just show you the picture. This is ES and NASDAQ. So these are my two. This is my ETF account. So my ETF account is up 7. This is the live funded one. So this one alone is up $8,100. So yeah, like 4,300. Well, you know what? It's weird without music. Let me turn it on and make it really low though. Hold up. I'm just trying to like not to get copyright strikes. Yeah, dude. Let's go for 100K today. Now we're outside of DD bands. It's gonna be the hardest part, but we'll see. Like I said, I took a very small loss yesterday. Very small. I'm talking like you guys saw me trade just like one account with some micros and like about $1,000. So add up the money there. So you add up, so whatever that is. Let's see, 81. So that's 8,100 in the live funded and across the apex is whatever that ended up being. I counted 40 something. What's the best eval to be an apex, for my opinion? It depends on how you like to trade. If you're more patient, stack's the way to go. Cheapest, easiest to flip. If you want to kind of be like with a little more leniency, you go for the regular ones. I do a combination of both. They both have their merits. All right, friends, don't forget to smash that like button. YouTube, Zoom, don't forget to go over to YouTube. Make sure you hit that. Ooh. You want to see if I can pass the 100K threshold? Let's see. All right, so today let's get our bands marked on the screen here. I logged at the open last night. I talked about it in chat. We were talking about opening. I thought I said something about it. I was waiting for MHP, but Simon, we were talking about it. As soon as we filled the gap at open, I just grabbed along. So I had to stop in the bed. Woke up, kind of like, I think here, like close to like I set my alarm for midnight-ish. Like I was waking up around there, and I literally woke up like somewhere over here, started trimming, and then just decided to close it out and fully go to bed. And I came up, and there we are here today. Just trying to get something. There's enough volatility there to get something. And I was just longing, it wasn't even much. It was like 3 contracts across all the accounts, therefore not even a lot. Decided to forget it. Went to bed, baby. excited though. Being right about the market. It's such a great feeling. Such a good feeling. Oh, watch all these bears last night. Like you guys see on my under Twitter. I even quoted Peter Schiff out there being ridiculous. These economists, they're million followers, are so ridiculous. Listen, leave the trading to the traders. You can't learn this shit in a textbook. Talk about Fed rug pull. Let me read you something goofy. Something goofy this guy said. He's a smart guy. I'm sure he's a fucking goofball. Listen to this stuff. All right. These people love to get the ratings, I guess, but listen to this stuff. Powell and I was like, I can't be being sarcastic, or you had a lobotomy yesterday. Powell just pulled the rate rug out of the stock market. All right. Not only will a recession rear its ugly head in 2025, but we will too be in a bear market, both stocks and bonds, as inflation heads higher. The Fed will not only cut rates, but return to QE. One sell-off day, and all of a sudden these like perma bear folks jump in there and start like Fed's gonna go to QE. Like absolutely not. They said they're never going to QE. Like, and for the longest time they're like completely not going close to it. Like what? The Fed's gonna have to go to QE to bail us out. Like quantitative easing necessary to bail us out. Like the last market crash, they were going into a bear market, bear economy, everything's going. And I'm just like, look, man, I know economists would understand this. The two main cornerstones of what a recession is high unemployment and low GDP. These are the things that make a recession happen. People don't have jobs and people aren't making stuff. Right? Companies' output is low. Neither of those things are happening. Neither of those things are here right now. Stock market sells off one day, and every fucking talking head in town is like, we're going to recession. And I'm just like, bro, I just put like 50K in my pocket, long in the dip. Like, I don't know. I mean, tell me about a recession, bro. Like, let's talk about it a little bit more. Is DD loading for anyone? Up? DD's broken. You have to get the manual numbers. I'm going to give them to you. Love the guy. He's smart fella, super smart fella. But the bearish FUD is just nonsensical at this point. Like I have to tell you, it's just silly. To me, it's goofy to hear these bears talk about the bear market. Monthly maps can tell you otherwise, ladies and gentlemen. All right, we've got 5980. You know what I'm saying? You guys know what I'm saying? Zoom. Everyone go to YouTube. Leave it open. Leave a comment. You know the drill. All right, get on over here. Let's do this. 5980 to 5900. Oh, 5900, yeah. Hold out. What's up? NASDAQ is 21603 to 21. Yeah, it's technically a no trade zone up in here. Yes, I was waiting for MHP to like basically double down and hit hard, but I hit it with like basically last night. Okay, so the trade I made last night. Look, boys and girls, let's add that up. Somebody do the math. How much am I up? Let's do that math today. Let's see. That's 10. Obviously do it quick. 10, 20, 29, 35, 40. Plus, let's add up this column, 47, 56, Wait, hold on. Am I an idiot? Was I off by 10K? Hold on. 10, 20, 29, 35, 40 on that column. This column, 7, 16, 25, 33, 38, 46, 48, 53. That's it. That's it. That's how much. I typed in the DD answer, you guys. All right, so that what is that? Let me just write this number in here because people are going to ask and I'll forget. It's ridiculous. 53. So, Simon, you hit. All right, cool. All right, I'll tell you about the trade I did. This is like a no-brainer today. No fucking brainer. All right, 53. Hold on. This is how much today? Okay, 53. We're going to do the running tally. Let's get 100K. 100K today. All right, and then ETF. I'm going to have to post this one here too. This is just across the props. Just to show you, I ain't making it up. This is over here in our trader. Showing you the outputs. This is my two DOMs. I have the top side, one about the other. The top one is ES, bottom one is NASDAQ. So over in over my ETF live account, which is my live funded account with them, dude, I'm crushing it. That account is way up there. A little house account they gave me, I almost doubled their money. All right, that's why I should. That's what I'm telling you. I'm making a lot of money for these people. All right, here we go. Trading for them. All right, let's go. 781. So 8100 APUX. I know 8.1 ETF. So far, whatever that adds up to be, 61,000 already on the dip. Can I get 100K today? I'm outside of DD bands. I might snap it with the tiny. I don't normally take the long, but it'd be fun to say I had a 100K day after the market crash of December 2024. Get the fuck out of here, Bears. I want to tell you, you can't argue with my monthly maps, baby. I mean, this might not be the big rally we want, but I'm going to tell you something. Let's get our numbers up in here. 60.16 is a red line on S&P. We're going to watch that completely today. 60.16. All these bears come out of the woodwork. 60.16. Remember yesterday? Okay, how many of you guys yesterday, again, everybody in Zoom, get over to YouTube now. You need to be in both places. Leave it on, at least chat. The numbers go down, we will cancel Zoom, and the numbers are down right now. The market's about to start. I'm telling you, we'll cancel the Zoom program tomorrow. Get over there. You know the drill. You got to trigger the bots. YouTube hates us when the numbers cut out. All right. So here's the thing. You guys remember yesterday? What did I tell you about catalysts? What did I tell you in our classes when I yell and scream at you when a catalyst is active? When you drop one risk interval on an event, you do not trade or you're a fucking moron. And I tell you that all the time. And when this happened, the catalyst is active. We said catalyst is active in Discord. And the market literally falls like 200 points. I want you to go on YouTube and sing the fucking praises of those courses because I yelled and screamed at you before I got sick on how a catalyst, we do not trade. Don't be a fucking idiot and do not trade when a catalyst is active because this saves your life. I walked away losing $1,000 so that I can make 61,000 this morning and I'm going to make 100K by the end of the day because I'm not a fucking idiot. I listen to myself when I tell myself that's the rule. You guys got it? How many people yesterday tried to long, tried to short, tried to buy the dip, bag held? You don't listen to anything I teach you. I made more today than most of you have in your entire trading career by waiting and getting out of the fucking way. That's how you do it. The catalyst active, you stay out of the way. That's the number, okay? Let's get our liquidity maps up. Just waiting for it. That's it. We teach you guys this stuff. All right, so first and foremost, we're outside the DD band. There's number one rule in DD bands. There is, unfortunately, as much as it sucks, there's a no trade rule outside of DD band for the most part. So there is zero trade. There's only the opportunity to take one small long. I only long inside of the band, back to the band. Outside of the band, unfortunately, there is no trade. So I'll have to kind of be some risky gambles to long to something. The long to something is 60.16, which is our next run length red line. And that is the target. That is my high target for today. Now, the idea is, do I want to long to it from anywhere on here? Now we're going to probably rally and recover. Let's see if I get the dip. So right, catalyst is active. You do not touch the market. You do not touch the market. The VIX hit a risk interval. Do you guys know? Zoom, right? Zoom call. You guys remember from our classes, we teach you this. There's 3 ways to measure all this stuff, right? We literally teach you all of this. We taught it last week, and I go, it's such a rare thing to watch the market fall apart. But when it happens, there will be signs. If you're in our group, you will not miss them. You will have the signs way in advance, okay? You guys remember? Here's the rules. Here's what happened. All of our sit-out rules. Number 1, irrational. DD band breaks. DD band literally breaks here. Number 2, a catalyst is active even before that. We call it catalyst. You drop 1 risk interval on an event right there. And then down here, VIX fell apart, VIX risk interval. And in our classes, I literally jump and shout and scream, and I say, you do not trade when CAT is active. You definitely do not trade when that's active at all. You get out of the way and you sit out of the way. I want everybody in Zoom to go over to YouTube and tell me that you had those signs. You tell everyone in YouTube. I tell people the lifetime membership alone is worth that indicator and that indicator. That alone is worth having in your back pocket tools to identify a market crash where it happens. We give you a tool that tells you market's crashing. Literally a tool that says it's crashing. My market tool was crashing at 60.96. What I did, you know what I did? I logged and played Call of Duty for like a couple hours while the market just bled. I didn't do anything. You know what I did? I made a fortune on the way back up. Still had my money in my pocket. So I didn't lose 200 points in my account. I didn't blow up and have a bad day. If you blew up and have a bad day, it's all on you. We literally said last week when we trained this class on it, we were telling you guys, all right, MHP and NASDAQ, that's a long. Let's see if we get close to it. Hold up. But I'm telling you guys, I'm not kidding. The indicators to identify a crash are real. Super real. Oops, wait, where is my... All right. Let's see if we can get 100K today. All right, let me go here. Okay. Did anybody long, let's be honest, anybody long and bag hold and be stuck in a trade all day? Anybody. And I tell you, the trick to becoming wealthy as a trader is to have money in your bag, is to survive a market crash. So you have money in your pocket to take the next trade. It's like when you lose, here's the thing. When you lose 100%, when you lose 50% of your account, you have to gain 100% to get back to where you were. That's like doubling your money. Pretend you didn't take the loss. It's like taking your account, having to double your money. You have to do that in crazy feat just to break even. Now imagine losing 80% of your account. Okay. You have to make 400%. You go from 100 to 20. You got to make 20K 4 times to get back to break even. 400% just to break even. The market moves in percentages like that. So does your account. Your goal is to survive a market crash, not to short it, not to make money. This is the biggest trading day I've had about a while. You know, like I didn't need the market crash to do it. I just need the market to recover a tiny little bit. All right. So SPY, we have targets from here, bull zone to bear zone. This is a really strong target inside of here. This is also a target. Volatility is high. I'm going to let the market bounce to one of these places. I'm not going to chase along here. I'm going to long there. I'm going to long there. I'm going to call it a day here. The market will likely collapse at 590 break. So we're going to watch S&P futures today. 590 break is roughly 13 points lower than the open. So I'm going to mark it here on my futures chart. Let's see where we open here. So 77, yeah, right here at the DD band. Basically, DD band is it. All right, so that's the one we're looking for. Let's look at the QQQ. So yeah, market's nice and clean and recovered. VIX is high. I'm gonna let it chop. It's gonna chop and go higher. So today's move is likely going to chop and try to build, and chop and try to build, and chop and try to build. It's gonna be like that. It's not a straight run move. I'm going to tell you, I've done this long enough. Chasing the high is the move of the idiot. Be dumb. 21,602. No FOMO today, baby. Oh, man. This is a great day today. I've done greater market yet. I'm still yelling at everybody for missing for if they traded yesterday. All right. Who here, I'm telling you, who here now that took our classes understand that we gave you exact tools to identify a market crash and you had them. Your membership alone gave you this tool right here. We had a catalyst active line, 6097. Market catalyzed, create a series of margin calls, which collapsed. Why did the market sell off? You want the answer? I'll give you the answer. Hold on. All right, hold on. Oops. MHP NASDAQ. Let's go. Let's tap it. Ready? Oops. Where's my... Let's get right on the MHP. Let's see if I can get it. I'm literally touching on one account. That's it. One account. That's it. Something small. Oh, I should probably hit it with one. MHP. Volatility is gonna be pretty high. Oh shit, that's it. That's hitting pretty hard. All right, let's do this one. That dropped pretty quick. I want to see MHP hold. I'm betting on the bull side. Come on, don't be crazy. Let's go, baby. All right, let's watch in Q right here. Make a little dip. Let's bats on this one. I'll take it. Let's go. Let's go. Let's go. Let's go. Let's see if we get that DD band. NASDAQ. Oh, let's get the NASDAQ competitive red line. Hold on. What's the level here? 21,777. Okay, so today's setup is going to be really, really easy. Just a retrace red line, and that's it. Okay, we're bet the NASDAQ. MHP holds. If I'm taking this bet from here to here, that's basically at 525 the upside. I love it. Guys, don't forget to hit that like button. Smack it. Smash it good. All right. You just saw something small on the table. Nothing crazy. Nothing crazy. Come on. Hang in there, baby. Hang in there. Don't lose MHP. Lose MHP, market's falling apart. I'm going to change my whole thesis here. Just something small. I'm only trading in one account. One account right now. Just this one. That's it. We get back above MHP, I'm going to tap in on all of them. There's a couple contracts on a bunch of them. Oh, let's go. Let's go to red line. Let's go, baby. Ooh, DD is at 38. Yeah, DD is at 38 for sure. So normally you can short bear zone top on a bad DD like that. You can. Let's take it. Let's take it. Let's go all the way back to OTS open, maybe. Oh, no, I forgot. I'm sorry. I didn't mention this. I was also long on my ETF account. My ETF account is now over. Let's do this. Sorry, I was only long in one Apex. Here we go. $11,000 today in my ETF. Let's go. 11K. 11K. Let's go. All right, hold on. Just scalping. V up scalp back to open. That's it. All right. Let's go. Let's add that. Hold on. Let me add up the totals in a little bit. We'll reconvene in a second. Hold up. Okay, I'm flat. I'm perfectly flat. We're gonna wait on this one for a minute. All right, so now that you guys have all of our tools, let me teach you guys something. All right, how did you yesterday? I tell you this. I tell you the secret to being wealthy as a trader is to not lose all of your money as a trader. That's it. That's the secret to making money as a trader is you do not lose your money. This is the number one rule. I'm going to teach you guys this. If you have 100K in your account and you lose 50% in a single day, okay, 50%, you must gain 100% to walk back to where you started. If you have 100K and you lose 80%, you have to gain 400% to break even. Do we all, everyone in chat, we understand this part so far? We understand this part so far. I'm fully flat right now. I've closed everything out. Okay. We understand this? Yep. We understand this. So you cannot lose, you cannot have this happen to have your account where you start here appreciate to a level that's above where you started. Because if you're dipping like this, you're always having to work so hard to crawl back. Your job as a trader is to never be in a position where you have to crawl back. So if you want some back pocket indicators, I tell you guys this all the time. This is what we created this. The Rocket Scooter is a risk management based platform. It is designed for risk management. We have indicators that tell you when the market's falling apart and for good reason. We teach you this. It's not technical indicators. It's exploitative. We have something called a catalyst active indicator. And this is how this works. I hate that I'm all sick today. All right. So, you know, when an event happens, just a single event. Where's my catalyst line? Oh my goodness, where are you at? Oh, S&P. Let me show you on S&P. When an event happens, okay, on Rocket Scooter, you're going to click this risk interval DD tab. You're going to go to ES and you're going to go here. And our table's broken right now, but the answer is 40. I give you the number is 40. Okay. When the market falls 40 points on an event, just 40 points, that's it, on an event, it doesn't retrace half the distance. We fell 40 points once you have the volatility expand. So what you're looking for is the market to move And when it retraces and continues to go, that you don't break the halfway point. Somebody's asked me how you do this yesterday. I'm going to show you how you do this now. This is how you save your ass as a trader. If you retrace half the distance, this point doesn't count. So you're looking for a point where on a tick chart, this by far is the best free piece of information you will ever receive in your entire life as a trader. And I don't know why we're not going viral after I teach you this. You have to share this to everybody. This is how I have made more this morning than probably you have in your entire career trading, because I didn't get fucked up on this day. You start here, and again, results may vary, and this is not trading advice, but you have back pocket indicators that tell you the market's falling apart. I sit out to get out of the way. Actually telling you to get out of the way of the market. It's not investment advice because you're not investing in anything. It's stay away from Wall Street advice. So here it is. You're looking for a period where the market falls very rapidly on a time independent chart. So you're not looking at candles. You're looking at strict order flow. That's what a tick chart is. Then you're looking for when the volatility expands. You start to see some V's on that chart. And the V's get bigger and then they get smaller. Okay. Here's an example. We're falling and then there's a V and then there's a V and then there's a bigger V. And then there's a smaller V. Do we all see that? Okay. When these big V's happen, like this one right here, and the volatility peaks and expands, the distance between here and the low, you don't achieve the half, then you have something called an event. An event is active at that point. The event marks something called an anchor point, which is here. Okay. Now, if you fall 40 points from the anchor point, whatever number is in this table, a catalyst is active. And as soon as you hit the 40-point mark, the market falls apart. Something magic happens with the risk interval number at Rocket Scooter. And you may not have thought it was a big deal. You may have bought the dip. You guys remember on my stream when the catalyst was active, I was trading one account and I put micros on the gamble. I lost like $300. I said I'm going to even lose $200 or $300. And then right at my target, I tried to long with one account, very small, and I lost $1,000 and I got out of the way and nothing happened. Guess what? I got off the stream, and look what happens when a catalyst is active right here. And you guys, that's what I tell you, you have to take our classes. I will teach you how to see a market crash a mile away. You will see this a mile away. When a cat is active, what happens is the volatility goes out of control. Volatility is the amount of V'ing that you see on a tick chart. The V'ing gets out of fucking control. You see this. On the other side of this line, it is insanely out of control. Within minutes of time, the S&P is falling and rising 30 points per minute. Who here in YouTube was at that class and you heard me yell at you and I cuss and yell because it's that important? I never want any of my traders to be caught upside down in a catalyst because we pride ourselves. When the market falls, I go, oh my God, I can't wait for Thursday. Oh, market's going to probably crash. Catalyst is active. I'm out of the way. I can't wait to Thursday. I'm going to make a shit ton of money on the way back up. And I'm on the sidelines, not even trying to trade. I'm already planning my next day. And then you come here and the V's get insane. When a catalyst is active, the market can fall apart. It doesn't always fall apart, but it can. And you always err to the side that it can. You never bet that it doesn't. You always bet that I need to get out of the way and get out of the way and let it fall. And it will fall and let it do its thing. Look, it just gets nightmarishly crazy. The V's down here, how big they were. 39 to 83, 60 points up and down. I didn't lose a dime. So here we teach you in our classes that you identify right here that the market's falling apart. Right there. Right there. It doesn't even look bad yet to the traditional trained eye. To the traditional technical analyst, traditional chartist, traditional technical indicator may not look like anything to you. You may see this, right? Like I said. Come on, I think there's somebody dancing around. You may see this and go, you know what? Let me grab that dip. I see this and alarms are going off in my head. I see that and I'm freaking out like, okay, you know what? All risk is off the table. The risk interval is the magic number for futures. It is. It's 40 points on the S&P. When you break 40 points on an event, when an event is active, the market can catalyze itself and become a nightmare. And even so, look. The catalyst is active. Oh, there's a green candle. Oh, there's a green candle. Let me buy that dip. And you are absolute, like literally an absolute gambler. You're a degenerate gambler that doesn't deserve to make money in the market if you're out there coin flipping when volatility is going to fall apart. You're coin flipping when the market is becoming catalyzed by margin calls. So our first warning sign, catalyst was active here. Catalyst, it's an automatic sit out. We teach you when a catalyst is active, no trading whatsoever. Get out of the way and stay out of the way. Number two, DD bands. There's no shorting outside of DD bands, and I only long on strong pivots. But when a catalyst is active, I don't do anything. So we had warning sign 1, warning sign 2, literally 200 points ahead of the fall. Oh, let me buy. Yeah, guys, let me buy this dip. That looks nice and clean. Let's get on. And a catalyst active walked right back up to the line and then crashed. Everyone in our community, everyone in our paid membership was celebrating. Catalyst is active. I'm out. Have a good day, guys. We'll see y'all tomorrow. We'll make money tomorrow. That's exactly what it is. The risk interval is by far the most important number in trading. Trading futures, you must know that number. It's based on margin requirements. It tells you when margins are when margin calls are high. Everyone, smash that like button over here on YouTube. Hit it hard. And when you catalyst is active, you do not trade. You had a bunch of warning signs. A bunch of warning signs. Okay. All right, 9:45. And the market just fell apart. I didn't do anything at all. Nothing at all. I was grinding some camos on Call of Duty. And look, it bounced right back up. And then it fell again. And it looks stable. Let me get that dip. Okay, whatever, guys. Look. And then it falls. And then the VIX hits a risk interval. Last piece. Last piece, which you never really see and we talk about all the time. 330 on VIX. And the VIX collapsed. And look what happened when the VIX broke the risk interval. The VIX itself flies off the handle with big 5-minute candles like that. You had the information a mile away. From a mile away, you had the information. All right. If you survived the market crash, everyone in Zoom, go to YouTube and say, I survived the market crash. I want you to tell everybody. Somebody said I tried to fight the sell-off long. Somebody in Zoom called. Everyone in Zoom, go tell everybody YouTube, I survived the market crash. I tried to fight the sell-off long multiple times yesterday afternoon, had every single tool I needed, ensure I stayed safe, chose to ignore them and not understand them as well as I should have. It's amazing to me what a different skill set trading really is, other endeavors in life. I've been with Rockscooter for a long time now. No excuse for you to have chosen to take on the risks that you did. If anyone else did the same, you understand, but taking responsibility for those poor decisions is crucial. There was zero decision to do so. Thank you for sharing your story. An event is something that causes the market to change direction, an unplanned thing. Markets, okay, let me add up my profits real quick. How far along am I, guys? Let's take a look. All right, so ETF, this is 10,000. This is 11K on ETF. All right, so many of y'all are bored. Do the math for me on Apex while I keep talking. How much did I make on Apex? All right. So here's the thing. A catalyst. I'll teach you. A catalyst is, I'm a chemical engineer, by the way. If you guys didn't know, I'm an engineer by trade. I'm a very accomplished chemical engineer as well. I've worked on very awesome projects across my career when I was younger. I'm an old guy now. I may not look it because of all the yoga and Botox, but you know, I'm in my 40s. I've had a career in oil and gas. I've had a career in chemicals. I had a career as a trader for a decade. You survived. There you go, baby. You all survived the crash. Okay, listen. So what a catalyst is is something that speeds up a reaction. Okay. When you have like two molecules like swimming around in a liquid, they got to find each other, right? So catalyst is like putting a magnet there that draws this thing to here and draws this thing to here, and then they're in the vicinity, and then they react. So catalyst basically it causes lower the energy of reaction, the activation energy, right? Basically, it increases the collision potential of molecules. It makes things happen that don't normally happen. And so whenever you have an event, which is the efficient market hypothesis states that hold on one second, I gotta timestamp this for my guy to make the video. This is some good knowledge. Hold on. So the efficient market, hold on, sorry. The efficient market hypothesis states that all available information is priced into the market, so nothing is a surprise. So an event is the surprise. When something surprises the market, a new thing happens that nobody could forecast. So an event starts a thing that happens. And when you go a certain distance, margin calls happen. That's what the risk interval is going to tell you. The risk interval is a number that we calculate off of margin requirements. Margin requirements and margin calls go hand in hand. So a risk interval is a number that we get, that we reverse engineered from the CME Group's program called SPAN. SPAN sets margin requirements. Higher margin requirement, higher volatility. So if you go a certain distance, a position's lost a lot of its value. Probability of margin call is high. Risk interval is that distance. So when you have a risk interval break on an event, so the event starts the process, it tricks a bunch of people, surprises a bunch of people, market moves. Then when you break the risk interval, the event becomes a catalyst, and a catalyst speeds up the reaction. Remember my little thing of like two molecules swimming around? They don't necessarily find each other. You put a magnet in there, they're like drawn together, and then they react. So you have to have a high density of events on top of each other, and what causes the reaction, almost like a nuclear fission, like an explosion, is a chain reaction. So a catalyst is a chain reaction. Somebody's in a margin call, and it forces them to sell, which forces someone else to sell, which forces someone else to sell. And the move speeds up because everyone's getting bumped. It's like one person falls, and then it knocks the next person over, and then they fall, and it knocks two people over, and then they fall, and it knocks four people over. So a catalyst is where an event has become a chain reaction of events. Do we understand? Everybody on YouTube, you guys got that? A catalyst is an event that is turned into a chain reaction of events. The estimate is about, how much did you say? An apex? Oh, y'all gotta add it up. Okay. So when a catalyst is active, what happens is that the market speeds up. It falls in a very strange way. It doesn't just fall. Market just doesn't fall like this. Okay. The market just doesn't fall like this. The market falls faster and faster and faster and faster as time goes by. It curves. Do you all see curvature right here? Tell me you see the curvature. Tell me you see the exponential nature of that thing. We all took a biology class where you get flies and you breed them together, right? 2 flies make 4, 4 flies make 8, 8 flies make 16, right? You have like a population chart where it doubles and doubles and doubles and doubles. Population growth. You guys see that, right? You see the curvature. One thing turns into 2, which turns into 4, which turns into 8, etc. Right? Well, that's a parabolic curve, but it's similar, both curved. The movement is parabolic in nature. Parabola. It's curve. Do you see a curve? Somebody says 51. That's the exact number. Why did I say 53? Maybe my math was off earlier. Okay, 51. Thank you. Thank you. So that's, what is it, 62? Okay. Let's go, baby. Do we all see curvature here? Just tell me you understand there's curvature. It's not something that was meant to happen. It's not something that wanted to happen. The market was stable right here. The catalyst became active right here. And look. Do we all see this? It's flat. Does everyone see this right here? Does everyone see the difference here? Do you guys remember when your second derivative flips from negative to positive? You guys remember? It means the concavity is shifted. This is the second derivative. It's like a rate equation. it shifts like this. This is a little bit of math, and it's gonna make some of you guys like blow your brains out here thinking about some math. But do we all see that? Do you see curvature? I want everybody to tell me you see it. Right? And right here is an inflection point. It starts to curve this way. Does everyone see the shift? Like this, right? This is what happens when you put accomplished mathematicians on the stock market. I'll teach you these things. This is speeding up. Why is it speeding up? Because it's self-catalyzing. It's not speeding up because the event is continuing to propagate some selling. It's self-catalyzing because one person bumps into 2, and 2 bumps into 4, and 4 bumps into 8. It's a domino effect that people didn't want to happen. None of these people selling wanted to sell. Once the curvature of the stock market flips the other way around, it's not because people are like, let me sell this Fed news. No, those people sold here, but it sold too hard that other people got bumped. And you see there's an inflection point right here where it curves this way. It's accelerating the other way, which means it's speeding up, right? If you have dominoes arranged in a pyramid and they fall over, you're going to knock over more dominoes as time goes by. It's not because the news got worse. It's because the selling compounded and knocked more people and knocked more people and knocked more people and even more people. It was a margin call event. It was not a market crash. And when I go on Twitter and I read what all these people, they go in there, these goofball economists going up there, no offense to them, but literally goofball economists like Peter Schiff, love the guy, he's a fucking goofball. Look at this. Powell just pulled the rug and right out in the stock market. Not only will a recession, one day sell off margin calls and lead to a recession. What? And it's a bear market in both stocks and bonds. Wait, what? How can you have a bear market in both? It makes no sense. You have a bear market in one. You have a bear market, maybe people are going to move to bonds for some safety, and inflation is going to lead higher. The Fed is going to not only cut rates more than projected, but return to QE. I thought this guy's being sarcastic. This guy's being legit. Apparently, he disagrees with the Fed, thinks they're going to have to cut rates even faster and return to QE. This sounds like nonsense. And this guy's got 1 million followers. Literally, the market, these people don't understand trading. The market moves on a margin call event. The market is not moving because everybody wanted to sell. It's not because everybody's like, you know what, I'm done with the stock market. I'm out. This is bearish. I'm done. The market fell because people got bumped. It's a liquidity wipe. The market, as long as it holds bull positioning, it's going to go. We don't know. This is the make or break today, 590. If we close above here, that's good for the market. If we close below here, that's bad. And we will have the answer today. But Jesus, I hate to see when the market falls off on a catalyzed event, which means people got bumped. It's not that people were like, okay, let's keep selling because the Fed news was bad. No. And I'll tell you what the Fed news, why the market sold to begin with. It's not like that is the reason that there's a recession looming. And people were saying that Jay Powell has been fudging the numbers all year to make the Democrats look good. And there's some conspiracy theory there. I don't really know, but here's the reason why. And I told everybody this is the reason why. You put me on these TV shows. I'm going to answer everybody's question on this. Yeah, Peter Schiff, you're a goofball, man. I love you, but that's goofy. That's some goofy stuff you're saying. You can't equate a one-day margin call event to a looming recession. A recession requires two things, unemployment and low GDP growth. And we have neither of those. Unemployment numbers are good. Continuing jobless claims are good within tolerance. Initial jobless claims are great. Unemployment numbers are low relative to what we had in bull markets. And GDP quarter-over-quarter growth is positive. It's not a recession looming. All of those are bullish signs. 0% chance that anybody is expecting a recession. That's just a speculative bet. Those things will have to change to prove a recession. But right now, we're in a great period. Here's why the market crashed. Why the market crashed. Again, I'm on fire today. I have energy now. I'm not as sick as I used to be. Here's why the market crashed. We're going to let this fall. We're below MHP. No trading today for me. I'm going to wait for it to get back above. Okay. Why did the market crash? The Fed's like one day crash and the bears are like, Fed's going to have to go back to QE. Like what? You realize the liquidity wipe in 2008 was massive. We lost 3% in the S&P. People calling for QE already. These are goofy fucking people. I'm telling you. Hold up. Come again when the market's down 10, 20, 30%. Let's talk about QE. All right. Why the market crashed. This is known as a dot plot. A dot plot is a participant assessment, FOMC participant. These are the members of the FOMC. Okay. This is their assessment of the appropriate policy. That's like each person has a vote. Hello, these are your members. This is where they believe policy should be. Each person is a dot. So here's your committee for 2024. Here's what they think 2025 is going to be like, 2026, etc. Okay. Now, what you may notice, which is interesting, is that last year in September, we had aggressive participation. You look at the mean, which is the highest. This is the mean, the thickest part, the middle. This is where everybody's kind of assessment is where policy is likely to be. As you see, they're expecting rates to go lower between 25 and 27. Okay, but here's the thing. Last September, we had one of these. It was more like this. It was much more aggressive on rate cuts, and more people were voted for lower. The difference in the reason the market crashed and collapsed is because this particular thing is that less people want it lower. More people want it higher. If you do the numbers, this is what we have, 4.25, 4.5. This is 25 basis points each tick. This is now an estimate of 50 basis points between now and next year. That's 2 25 basis point cuts. Last September, we had like 3 or 4. So it's half as aggressive. And not only that, the worst part of the dot plot, which most people haven't even commented on, is not just the idea that the mean is here and we're likely freezing, as the majority of participants are saying 3.5 is it. We're going to freeze. That there's a split on the long-term effect. This right here is why the market crashed. This right here is what caused the panic. This right here alone is what caused it to happen. The guy on the very right, the longer run. The longer run is split into 2 camps. Do you see this? 2 camps. This one and this one. There is no mean in the middle. There's no accumulation of people who are going to outvote the rest. There is a split. The split itself. Every time the government or anybody is split on something, the decision-making process is unpredictable. There's divergence. There's dissent. Half the people are like, we have to go lower. The other half the people are like, no, we're going to do 50 basis points in 2025 and no more for 3 years. 50 and that's it. No more. You see this? Okay. This is almost half of the participants think that 50 and that's it. There's a camp of people that are like, no, we have to go lower. You guys see it? The fact that the Fed is split into 2 camps is the reason. And why is that the reason? Is because anytime the government split on something, it takes forever for the decision to be made. Endless bickering and fighting means unpredictability in Wall Street. Remember yesterday we had like a 98.5% chance of a 25 basis point cut. Wall Street knew it. It was so easy. This dot plot makes it easy to predict. This dot plot makes it not easy to predict. Does everyone understand this? This is the reason the market crashed. Holy shit. This is huge. In the long run, we might be at 4. We might be at 2. Where are we? Wall Street couldn't fathom that, right? So anytime there's a split and there's not like a clear picture, Wall Street just freaks the fuck out because Wall Street just freaks out. People are like, you know what? I'm going to sell. And it caused just enough selling that the market collapsed. And that's it. Okay, let's get right and see if I make a trade here. Oops. That's literally it. It's because there's 2 camps. There's not a clear picture. Policy may freeze after Q1 of this year. What? Wait, let me turn my fan on. Hold on. So like that's the thing. Let's check S&P really quick. It's because the fear of the other things is all part of it. But why the market collapsed was because of the catalyst. But why things got a little crazier than normal All right, S&P below DD band. Let's look at it. All right, let's take a look at last night. So the idea is that if you think as a trader, you're like, okay, my bullish thesis just got clobbered. It's now a 50-50 shot that my thesis that the Fed's going to be cutting rates indefinitely is gone. It looks like half the members are there. And what it did was it exposed a little bit of kind of like, I wouldn't say corruption, but I would say why it's like this. And this is where all the conspiracy hounds are kind of going with this, okay? It's the following. Why were the numbers so aggressive leading up to the election? Okay, hold on, this is going to be solid gold. You guys ready for this? Y'all ready for the mic drop? Okay. Should I long MHP? Small and S&P? Just small? Just small? Okay, let's play some micros. Well, whatever. Just for fun. I'm going to try to get 100K today. I take this trade every single time. Why not? That's small. Okay. It exposed the corruption in the FOMC. I'm going to say it. Why were the numbers so good leading up to the election? And after Trump gets elected, the FOMC shows their actual hand. Conspiracy people are telling you that they were trying to pad the numbers to make them good leading up to the election to side for the Democrats. They can take credit for the rallying market and then trying to make, and then just kind of pull the plug after Trump got elected. How does that sound? Oh, shit. There we go. Every single time. I take this trade every single time. Every single time, baby. Come on. Come on. Hit that bear zone, bull zone. Let's go. Let's go. Let's just go. Come on. My DOM froze in that moment. That sucks. You see the DOM froze and it unfroze right there. Do you guys believe that the FOMC was showing a more aggressive bullish sentiment so that Kamala Harris would look better going into the election? That's what they're saying. And now that Trump got elected, the Fed is like revealing like, oh, by the way, we weren't really going to cut rates that aggressively. We were just kidding. Not saying that that's what's happening, but that's what people are saying. And the idea that the Fed has been deceiving people is another theory as to why the market was overreacted to and collapsed. Well, we know the market collapsed because of catalyst, but the sentiment of that reasoning of why people sold was that, wait a minute, how can the Fed, why did the Fed change so aggressively? All the data looks so different here, and now it looks insanely different. What changed in like 2 months of time? Nothing. The data, the economic data is all the same. It still looks pretty okay. What led to a substantial change in half of the members' policy assessment on that dot plot? Makes you think, right? Why was everybody so aggressive on rate cuts leading into the election? Yet now, half the people are like, JK, bro, just kidding. Now we're going to 50 points and that's it. We're going to hold. What a stupid, move here. Or sorry, Dom froze. That's kind of dumb. I'm really sad about that. Why'd my Dom freeze? Trader rate's like so broken sometimes. Right? Why not? Let's take it small. All right, I'm gonna enter some longs here. Just some smalls, nothing big. Why not? Just I'm gonna play the red line. Get a little run on that volatility there. I don't normally trade outside DD bands. Here's the rule. The normal rule is no trade, but I have a really strong bull thesis, so we'll just see. I normally do no trade up here, but I'm trading small. Small is allowed as long as I have strong pivots. Now again, we train people. There's no trading up here. But we'll see. Oh, let me take my blood pressure roads. Yeah. You're not saying whether it's intentional, but it happened. All right, your questions. Mindful markets. Is the speed to process due to what we see on the monthly maps? Yeah. So let me show you monthly maps today. That's the crucial point of the market. I want to see, did we survive? Okay, let's look at the change. We've thrust into bear territory. It's not that great. Now let's analyze this really quick. Okay. Okay, hold on. Let me clear all the drawings out in the draw list. Okay. So the analysis on monthly maps. Okay, let's do the 3 points. Number one, DD's back to half. That's good. Okay. By the way, spies of MHP. That's decent. Now, we thrust in the bear territory. Let's look at the difference. Number one, monthly maps. This is what you all came for. Is the market going to be bearish going forward? Was this bad enough? Number one, we're in bear territory, and this is bear territory through March. That's like bear territory. This is not good at this level. Okay, bear territory. We did not fall into a bull zone. Bear territory through March. This is enough to change the dynamic. Yeah, I'll just say through March. Bear territory. This is a caution. Caution. Okay. We have dropped below all bull supports. It's the scary part. So after the retracement, we could probably turn around and sell off. I'm not betting on a full reversal anymore. No full reversal. Number two, the bull side is liquidating over the next week. That's bad as well. This could be bearish for the week. Bull liquidating. So it means I don't think that the sell-off is over. Margin calls usually take like 3 days or so. So we might get more selling after today. Number three, bear side liquidating as well. That's decent. There's still short squeeze. So we're going to see some shorts covering today, which is probably why it's trying to go up a little bit. Okay, bear liquidating, bear squeeze. Okay, so we have bull selling, which is down. Bear squeeze, which is up. Okay, right? Two sides liquidating, that leads to the volatility we see. And number four, there seems to be no volatility, which the market didn't plan for that, which is exactly what you see. You saw the market fall on a catalyst and there's no planned volatility. It's still no volatility, so volatility is going to collapse. So basically, no volatility, which means the selling, short-lived, short-term, short-lived. Short-lived crash. Okay. All right. So diagnosis, we're going to retrace. And selling might continue. Retrace today and selling might continue for the next day or two. This is not good. No bueno. Not good. I might not get 100K. Not happy about that, but that's what it is. It is. Oh, what's going on with my trade here? We broke MHP as I'm sitting here talking. No. I hate how my trade of 8 Dom just like crapped out on me here. What's going on? Oh, that's not good. I don't like that. It's not the best. Man, I swear, I was like, I don't know what I'm thinking here. I'm still a little. That's not good. I don't like trading below MHP, and this is kind of like I was betting on the forward trade, so I still think we'll get it, but we'll see. If not today, hopefully by tomorrow. I want to see this right here. It's rare. I want to see that right there. And I think if we get that, it's going to continue to sell. I don't think we're going to rally from this. I don't think we're going to V up. Those multi-maps are pretty bad. Nasdaq's even worse. Oh my God, Nasdaq is worse. Nasdaq has built a bear zone right above where we are. Well, that's not good. Not good at all. Nasdaq has illiquidity pockets and more volatility go with it. Not the best. Not the best sign in the world, guys. Not the best at all. I should be paying more attention to this trade here. Oh boy. Oh yeah. All right, YouTube, it's time to get out of here. Everybody YouTube. I mean, sorry, Zoom. Everybody Zoom, go to YouTube now. Let's get back over there. Zoom calls only for the first hour. Monthly maps, not my favorite. I need to be out of this trade very soon. This is a bad spot. I've got no support pivot here. Resilience is still greater than 0, so I might hang on for just a tad, but man, this holding here, res greater than 0. I want to stay above MHP. Losing MHP is really bad. DD ratio is good. Like I said, I'm just too conscious, not even trading with much, just something tiny. All right, you guys. See y'all later, Zoom. Head over to YouTube. Love y'all. Ooh, baby. I like it like that. Come on. Don't hit MHP and reject. Let's not see some selling. I want one retracement. Just one. Just one, y'all. Just one. Uno. If we get above MHP, I'm going to long in all the accounts. Just small. Couple contracts a pop. Just a couple. If I, like I did earlier, I should have closed out. That's the trade I take every single time, but I was not paying attention. That scalp is really good. So the way that the bear zone, bull zone sandwich is played on MHP break, here to here is a trade I take every single time. That one, I should put cash out of that. I wasn't paying attention. If we break through here and support, that goes to the red line, and I'm out for the day. I'm out. Now, this is bad. This is bad down here. Very bad. This is bad. No good. Very bad. This is still decent. I need it, but losing MHP by one strike is like my stop, so I need to kind of like reevaluate my life here. Playing volatility is always crazy like this. Let's look at QQQ. It's like on the gap fill. See, Nasdaq broke MHP as well. Being below MHP is part of the loss of the greater market. No good. DD band. All three signs are bearish. That's kind of the thing. Greater market has flipped. All three things are bearish now. DD less than half or below MHP and monthly map, not bullish. The greater bull market, the first time you guys been a rocket scooter probably, is now reared its ugly bear head. Does everyone understand? Does everybody here understand? Yes? You understand? All three signs of the greater market are bearish. All three signs. Greater market. Greater market. This could be enough. We have to be careful. We're not going to wish something. We're going to see what it is. Number one, DD less than half. Okay, not good. That selling was enough. Now, it may be short-lived, but two, SPY less than MHP. No good. Number three. Monthly maps. Bad. Greater market is bearish as of now. All three signs. So looking for shorts is not a terrible idea. Hold on. It's a little toasty in here. I'm going to open some windows. Why does my fan keep shutting off? It's like a poltergeist in here or something. I'll be right back. Hold on. My fan keeps... Why is the fan shutting off? What the heck? Like my fan, I turn it on and then it turns off. My fan hates me. Why you suck, man? All right. I need to get out of this long here. Nah, boo. Okay, we're on the bad side of this. Let me close. I just put two contrary, but I want the retracement though at half cap. That's what I want to see. This is what I want to see. Just come on, baby. Hold up on this one. Yep. Market's looking a little gross. That's too far. It's too rich for my blood. Let me close this one out. Wait, you still can't use QQQ liquidity map? How come? What's wrong? Why is my fan turning off? Hold on, let me tell. Hold on. And like my fan turns on. And it shuts off. Wait, weird. I push the button. It turns on and shuts off. I just held the button. It stayed on. Never mind. Oh, it feels so much better. I was like burning up in here. I'm still sick, you guys. Oh my goodness. All right. So this is bad, but I am at HP with positive resilience. All right. You know, I'm bailing this. Whatever. Bye. Bye. Okay. So you don't need to correlate. You just need to watch one and trade the other. Like if SPY hits a pivot and I want a long SPY, then I just long SM or long ES. I just long ES. Like when SPY hits a pivot, I long ES. You don't need to correlate anything. Like don't make it hard for yourself. Just watch and wait. That's like we have to like basically what you're trying to do. So we're on the bad side of MHP, and we jump to the other side of MHP. I'll take a long again. But until then, we're gonna wait. We're gonna wait for this. Come on. I'd love to give myself a pretty tasty 100K day. My idea today, my hope is that we're here, and the problem is we're going to get here, and then we're going to keep selling. Oh, you can't see what I'm drawing. Hold up. Hold up. Clean this off here. So here, the problem is I think that this is about as good as we get. I don't think the selling is over yet. That's the sad part. Like all the signs came through bearish. Market didn't turn out. We didn't survive yesterday. The animal is wounded. The animal is hobbling through the forest, bleeding to death right now. Spacey spike. It's not a bull market anymore. It's a bear market. It's the signs are all bearish. I do short in a bear market. 100%. Look, I do this all the time. This is my greater market. Greater market. All things are bearish. All three things are bearish. All things are bearish. Do you have any questions about what I'm saying? Would I still take a DD float? If I get there in a bear market, what do you mean? The short or to long? What are you talking about? Would I still take a DD float? What's your question? Would I long off a bottom DD band? Is what you're asking? I'm not even gonna answer that question. You guys should know the answer to that. Somebody else answer it. When I long off the DD band bottom, let's see what you guys know the answer to that. When I take a DD float trade, you guys chew on the answer. Don't just rely on me. Answer that question yourself. What do you think? What do you think? What'd I do? Let's see if you get it right. Let's see if y'all know me. When I long, DD float. When I tap that bad boy long. When I hit it and quit it. What's the answer? Oh my God, that's so funny. So iDoc and I both have remotes to the fans. The remotes are cones. They're working over each other. She was turning my fan off while I was turning her fan on. That's so funny. I was like, is there a poltergeist in here shutting my fan off? She's in the room sick, so she's cold. I'm in the room burning up, so I'm hot. So I turned the fan on. She turned the fan off. We've been fucking with each other for the last hour. That is hilarious. I'm sorry, iDoc. Well, look, I'll suffer for you, all right? Hold on. Are you here? I'll turn the fan off. Wait, what was I trying to say? I was trying to do something. Oh, yeah. All right. We've been like, it's so funny. This is like something from a Christmas movie, right? Like, this is like a rom-com moment. We're both fucking with each other from other rooms. Who even know? The fan remote is on the same frequency. It's the same channel. What a silly idea. My office is like literally right above the bedrooms, right below me. All right. When I long at DD band bottom, always, every time, every single time. DD ratio is less than half, which it is. I'm gonna hit it smaller, greater than half. I'm gonna hit it harder. It's smaller, so I'm gonna hit it small. It's not just yeah, you guys nailed it. Today's gonna be volatile and choppy. Long trade isn't gonna be a straight run. It's gonna have to be choppy today. It's not gonna be an easy setup. Just waiting on this. Like I said, res is still good. Res is still greater than 0. I want to see this here. That's what I want to see. I'll confirm long on MHP break, but I'll get back in. For sure. Let me just get rid of this. I fly now my stuff right now. I'm in no positions right now. That is so funny. I'm like, why does my fan keep shutting off? And she's probably like, why does my fan keep turning on? All right. But yeah, no, like right now, I still feel like we're going to retrace, but I don't think we're going to rally. Today was bad. Yesterday was very bad. Framework of a bull market has been broken on this event. We're now in pure bear territory. That's so good. You thought your room's haunted? That's what I said. I was like, I got a fucking poltergeist in here. I'm like texting her, and I'm like, hey, I need you to call the guy who installed the fan. Something weird. And I know the electrician, like, I was like, maybe he wired something weird. Like, I was like, okay, maybe call him and see. LOL. LO fucking L. This is hilarious. The market's flying. Let's go above MHP. All right, so technically speaking, in a bear market, MHP shorts are decent to take if MHP res is less than 0. Right now, it's above 0. So I don't take the short of MHP. I don't take the short here when this orange line is greater than 0. So I don't take the short, even though there is a short setup. If I was a bear today, which it's bear market, not a terrible idea to be a bear. If I were to short this, this is the short confirmation that I'm looking for. 590 sell. That's it. That's the bear long down setup. I'm not sure if I'm going to take it because anytime I get anti-confluence to a short, I don't take it, even in the greater bear market. When that monthly resilience number, that orange line right here, is greater than 0, this one I don't short. I'm not going to lie. I made 11K in my ETF account. I'm going to hit it long here. I'll try to make 20K in ETF today. As a matter of fact, I'm about to pop it long right now. On MHP break, I'll take it. Why are we not looking for shorts? No, you can be. You can do whatever you want. The setup from here to here is a bear long down trade number 2. That's from the liquidity map. You guys see this? This guy right here is a good short setup. It's an amazing short setup. If I were bearish, this is the place to short from, the only place to short from. This is the spot. And again, I have to be ultra convinced to still bear a market. I believe that I feel like we're going to still retrace and then sell tomorrow or by the end of the day today. Right now, all signs are bearish. Greater market is bearish. No good. But my one indicator that I have for confluence on shorting is this leg right here. I'll take it with a pretty heavy hand. The exception is if this MHP resilience number, this is the tiebreaker here. This tiebreaker is greater than 0. I just don't take the short. It doesn't mean it's not a good short to take. I personally, my rules don't take it. When I short on bear market, I need unanimous confluence. My rule is all of my indicators need to be bearish. And while the greater market, all of them are bearish, the one confluence indicator for this particular pivot is not bearish. It's bullish. So for me, instead of taking the short, I'm waiting for the break. I'm going to long the break if I get it. Does that make sense? Hidden. That's not a terrible idea. As a matter of fact, a lot of people in our community are shorting 590 right now. And I think that's a great trade. I don't think it's a terrible trade at all. I'll likely miss out on it for the chance to get along. When I short, I have to have all my indicators line up to short. I rarely short. If it all lines up, I take it. It's an obvious short to take. But as you see, as this orange line right here is greater than 0, it's the number that's up here at the top, 2.3. The market's having a hard time selling from here. It's still trying to sell, but it's still trying to pop above it. So right now I'm watching the fight unfold in real time. That's why this tiebreaker is here. This is the sum of the 500 stocks in the S&P and what they're doing. So right now I've got 2 indicators working against me. The short, number 1, resilience. I'm going to draw it with a white line here. Resilience fills the gap. Let's check. It's this number right here. That's greater than 0. Number 2. And again, I'm not longing from here. I'm waiting for the break to take it. This is the difference between me and some other traders. I'm waiting. MRES greater than 0. Okay. So I'm waiting for the break. 3 little slashes. I call it a break. It's not, I'm betting on the direction. It's if it breaks, each tick, if it breaks. So if it breaks, I'm chasing the long. It's a good long to take. Just on a squeeze. And again, I'm going to scalp it, take my money and run. So down here, because I have multiple indicators still showing that the stocks aren't crashing out, I'm not taking the index short just yet. Does that make sense? Index short, I need all of my things pointing down. That's how I trade. Just like yesterday, I didn't short the crash market. I sat out. I made a fortune today on the way back up. I'm waiting to see if it pops, and I'm going to take the long trade if it does. Selling's not over yet, but I've traded long enough to know that you don't get 3 days of just consecutive selling without a major event. Now, this could be that major event. Yesterday was extremely bad. The market was thrust in the bear territory, and right now it's trying to make sense of it. The stocks are holding on. NASDAQ and S&P, the resilience number at the bottom is telling you what the stocks are doing. This is the stocks influence. Right now, all the stocks are in a decent spot. Even though the market is bad, the stocks aren't necessarily collapsing. As a matter of fact, they're hanging on. Do we see that? You can change the frequency on the fan remote. John, how does that happen? How do I do that? Oh, there's some things on the back. There's some switches. Let's see if that does that. Is that probably, it has to do with the switches, right? These are different frequency channels. Who are my electricians in here, or people that aren't absolute morons like me when it comes to remote controls? Got some switches here. Is this going to change the channel? Do I have to sync it with the fan? That's another question. See, I've never seen, now that I got a brand new house, brand new fans. We're on the fan somewhere. I'd have to sync it somewhere as well. Yeah, that's what I figured. Okay. I love having smart people in this chat because I'm smart at the things I'm smart at. I'm a moron at the things I don't know. Like, I'm good at some things, I'm awful at everything else. That's kind of like the story of my life. You know what I mean? It's like I'm a savant at the things I'm good at, but I'm not great at everything. I'm actually like below average at most other things. Put some math in front of me, I'm good. Give me a garden, I'll grow it. But give me, like, you know, certain other things. Oh, I'm just like an idiot. Oh, MHP break. Should I? Dare I? Like, why the hell not? Like, why the hell not? No, not two. Just one. Just one. Give me 1 second. I'll be right back. Oh, let's get that break, baby. Break it. Break it. I'm taking the long on the break, but it hates me. Just one. Just one. Come on, break out. Do I want eggs? Sure. Only 3 today. Come on, baby. I've been waiting all morning for this. One awesome trade. Again, like I said, MHP is a great short. You see how this is trying to sell from there. I need to relog into Tradebait. It's like glitching out on me. Tradebait gets crazy sometimes when the market falls apart. You want some eggs? Would I short hitting the bulls on bottom? No. That's not a short setup. Bear zone top is, which is what you see right now. 590 is an excellent short. Excellent short. Am I trading the next 2 weeks with the low volatility? Volatility is high right now. Of course. Yeah, of course I'm going to be trading. Why do you say low volatility? Volatility is extremely high. Well, relative. It's not extremely high, but like relative to what it was. Right. The VIX forward curve flipped to contango. We're in backwardation for quite a while. I think there's gonna be some good trades next week. It's not gonna be easy. It's gonna be brutal. I think we get like today and tomorrow are gonna be 2 candles that do this internal. We're not gonna retrace all of it. We're gonna have like wick candles on both sides, and then maybe day like Monday or Tuesday, Mark's gonna decide if it's gonna continue to sell or not. Oh, you mean seasonality? Now, I particularly, as a trader, don't believe in seasonality, and statistically, it's random. Yes, people take off for the holidays, but it doesn't really, in the modern day, it doesn't change the dynamic of the market as much. Like things like that were more true back in the day when market making and liquidity provision was mostly manual done by actual traders. Computers and algorithms do not take off for the holidays. There might be less liquidity from actual speculative buyers and sellers, but the market is going to be just as voluminous and just as ability. So that's not going to be an illiquid market. Like the idea that Santa rallies and like that. I hate when a lot of people say that. The market, these archaic things in the stock market are great from the 70s, observations from the 60s to the 80s. Yeah. In the modern day, there's no such thing as a Santa rally, Black Friday rally. Seasonality has essentially been wiped by the efficiency of the market. The market is going to be completely liquid no matter what. So I don't personally use any seasonality anymore. I feel like it's an archaic institution to do so. But it's not a terrible thought to have. Historically, people take off in the holidays. But I'm not trading against people, am I? I'm trading against robots and computers. And they're very much still at work so that the people can take off for the holidays. We got robots doing our work for us now. The market's going to do exactly what it's going to do. I think that every year it's going to be random if the market does or doesn't react around Christmas time. So keep that in mind. This is the second time this damn trade is hating my guts. Have I seen the book about starting civilization and written everything from how to grow and how to make everything how to do? Yeah, I've seen that book. I've seen it on Instagram. Like if an alien were to find this book after we wipe civilization, it's like how to build a computer, how to do all the things we do. Yeah. Your percent R&R, my strategy. A lot of my trades are 1-to-1 or 1.5-to-1 word to risk, sometimes greater. The market will dictate what I do if it's greater. See, I've never noticed the fan thing before because now I have another person in the house with the fan who likes the fan off and I like the fan on. In my houses that I've had in the past, always just been me. I turn the fan on. I've never changed the channel on the fan controllers. Screw this dang market. Second failed break on MHP. Breaking my heart here, market. Come on, get up. I'm still hanging on. Yeah, no, it's an excellent short setup at 590. It's an excellent short setup. It is like the place to short. It is the only place to short if I were to short. The only short. But I still don't take it because I don't have full confluence to short it. I'm waiting for the pop to take, which I engaged in. But yeah, 590 is the only short that I have on my setup. You can see right here, the algorithm is showing me that particular move. Although I need full confluence. So this number right here, I need that to be negative for me to take the short. As you see, because it's not negative, the market's having a hard time collapsing from that indicator. You see that? We all see that, yes. We all see it. Dude, Tradeovate like completely glitched out, guys. Like all the windows are frozen and stuff. Oh my god. I'm just going to just close these things down. I gave like every time I push a button, it's like splink, 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 splink. Okay. What about you? Okay, let me close you down. Like the windows just went pure white, like the tab just crashed or something. Okay. Oh my gosh, come on, Tradeovate. What's going on here? Hold on, I'm gonna have to let me refresh this. Hold on, guys. Like literally half the windows are just like they died. Come on, let's get that break. Let's get that break. Come on, break that MHB. Oh, let's get some in there. Ah, boring. What's up, Starboy? What up, man? All right. What do you think is realistic to make a year using prop firms like Top Second Apex? What is realistic? I don't know. That's so hard to say because like, you can't really project how much people can make after taxes. You know, the take home is going to be different for each person. So, God, this market is just not wanting to move. MHP RAS just went really positive. That's good. I mean, some people, for the most part, 98% of people will make nothing. That's the starting point. 98% of people will make absolutely nothing. Maybe more. Some people might make 5 or 6 figure payouts. I'd say the rarest of the rare take home 6 figures or more from a prop firm. And then taxes, you still lose like 40% of that, and then you lose 20% of the profit split. Your take home pay is absolute shit trading prop firms. You don't really make anything, even when you make something. Unless they move you to Schedule K1 on your live trading, at that point, then you're going to make some money. But 1099 prop payouts, you're going to make anything at all. Like Pat Weiland with his 500K Apex. I don't know how much of that is split with Apex. I don't know the split. Say it's 10%. That's 50 gone. 40% tax is 200K gone. His take home is 50% of that after taxes. It's kind of the problem. Why, market, do you suck so much? Well, no, I mean, it depends on your tax rate. I'm just saying 40K is an estimate. 40%. God, I just market so much. I'm so pissed off right now at it. Go. I'm going to point my finger. Let me put my sunglasses on. Resilience is positive. Let's hit that half cap. All right. Sunglasses on. I'm so blind. What if I did sunglasses and real glasses? Do I look cool this way? Math question. If you have a big EV, does it make sense to hedge count cost? I just saw 6 50-50 trades in a row. What do you mean by big EV? What is EV? Electric vehicle? I've got the flu right now, so you gotta spell things out. I'm kind of slow today. Screw this dumb market. I'm not getting your trade I want. Thank you. Oh, a big expected value. Or my lucky sunglasses aren't working. I closed out. Okay. Hedge the account cost. How would you do that? You've lost 6 50-50 trades in a row. Let me ask you a question. How do you determine that trade was 50-50? First question. What was your strategy on that trade? Does it make sense to hedge account costs? What do you mean by account costs? You know about prop firm stuff? Okay. So your stop is equal to your take profit. Is this like prop firm stuff? I'm still trying to figure out how would you hedge your account cost? What does account cost mean? You talking about like the cost to buy prop accounts? Your winning trades should be hedged for your losing trades. It depends on why you would hedge. Are you day trading? Are you swing trading? I need more information. Like, I don't hedge a day trade with another day trade. I just close out my day trade. Well, I pay commissions twice to go neutral. Like, if you're longing something, the reason to hedge is that you don't want to exit the long. Like, you need to be on for the X dividend day. You need to be on for the tax reasons or whatever. Hedging is typically something reserved for a reason. You can't exit a trade. Therefore, you need to hedge. If you have options trades and it's 6 o'clock in the evening, the options market is closed. Stock market's tanking. The futures market is tanking. Okay, you hedge your options by shorting futures. You hedge because you can't close it. The only reason to hedge anything is because you can't close it or you don't want to close it. The idea that you're losing a day trade and you're going to hedge it with another trade is ridiculous and excessive. Does that make sense? You short and you spread betting, or you have some arbitrage you're doing, then that makes sense. But you don't want to exit a trade, then that makes sense. So what is it you're doing? I short and you spread bet against UK to cover the cost of buying 4 accounts in Top Step. Okay. Oh, okay, I see. So, right. So a great example is you're playing your evals and you're playing your real account. Trade your real account in the probability direction of the market and hedge your real account with the fake accounts. You have 20 evals you're trying to pass. Like right now, if I believe that the market's going to pop up, I'm waiting to pop up in my real account. If I take the long in my real account at 590 break, I will short every single eval account at 590 as well. I'm playing them opposite directions. If I make money because the trade goes up, I'm going to make $7,000 or $8,000 in my real account. If I blow up 20 Apex accounts at $20 each, it's a $400 loss. If I lose and all the Apex win, then I got really far to pass all my evals in one gulp. Great. And I lost a little bit of money to do that. That's where hedging comes into play when it comes to prop firms. You can hedge your prop firms against each other. You want to secure a payout, long your Apex, short your top step, things like that. Right, you're paying like $400 for a little bit of drawdown. So you line up your real account with the direction of the market. And you hedge your real account with evals to try to pass them. Don't hedge your real account with your funded accounts. Hedge your real account with your eval accounts. Does that make sense? Monthly map for SPY, GR, I posted on Twitter. It is very bearish right now. It's not good. Activation fee on Apex, like $100 or something like that. So like right now, if I were trying to short 590 S&P with my real account, then I would long all 20 of my evals at that exact spot, hoping that I blow up all the evals, because that means I made a shit ton of money, which was much more than the cost of evals. How valid is the daily hedge pressure and the monthly have been broken? Not at all. The rule is we do not take it. So the rule that we have here is that on MHP break, you do not take the leg up here. That's a no-go. That's the rule. Monthly is too strong to bat on the bounce. Irrational trade invalidates this long. This leg is not going to happen. I don't take it. Good question, Humor. Rich, does that make sense? But I wouldn't particularly, like, your goal is to make money. So you're going to trade with your real account to make the money. You're not going to always think hedging, but if you are unsure of your real account and you're going to try to take a trade and you're like, well, if it goes against me, I still want something out of it, then the best thing to do, because the risk and reward is so lopsided, not say that your real account loses money. Say that you lost $5,000 on your real account, but you passed all 20 of your Apex evals, right? You lost $5,000. You paid $20 for those evals, and then you paid $100 to flip them to funded. It just was slightly more expensive to become funded, but it makes like basically like it's like pay to win. Imagine like you play a video game and you buy like the better guns, you buy the better gear. Instead of it costing straight up $400 for you to get $20 accounts and pass them, plus 20 times 100 is 2,000, so $2,400 to go funded. It might have cost you $10,000 to go funded because you took a loss in your real account. But guess what? Now you're funded with 20 accounts. It was just slightly more expensive. That's a great way to think about it. Right. So you much rather win your spread bet as an instant pay and no tax in UK. There you go. If I was in a short, I would bet that you plow through hedge pressure and keep going. I don't use it to take profit. You can trim if you want. It's again, no, that's not investment advice. I can't tell you what to do on your trade. But I take the bet when MHP is broken that you just plow right through it. So there's no reverse long off in this. crazy. This market has had no momentum to the upside since the open. The market's been doing nothing but trickling down. If I were short, I'd fill the gap and call it a day. If I were short from here, I would fill the gap at the best and call it a day. The resilience number is greater than 0. It's likely to end up over here. And again, 90% of days end up here. Well, the hedge break's no joke. And again, my confluence indicators are going against me. I would take any short I get as short-lived. And just kind of keep your eye on that. Yeah, that's how I would do it. But no trade right now. What do you see in NASDAQ? Similar. NASDAQ has a similar approach. NASDAQ has no support until here, which is roughly 120 points lower in futures. NASDAQ resilience is still greater than 0. Don't want to risk it for the biscuit. Looking for the gap fill. Again, NASDAQ resilience is greater than 0. I do want to see the gap fill. I do. God, it's so appetizing to me. And I don't trust resilience. Whenever markets are irrational. But fuck it, I'm going to take it. I was waiting for this one. Just one contract, nothing crazy. Again, this is just, again, I'm just being crazy. I'm entertaining you guys on the stream. Res greater than 0. Actually, the white number. Probably a dumb idea, but we'll see. Gap fill. Res greater than 0. Let's see what we got. Do I feel like UK props have less strict rules because around the world globally there's less strict rules? The United States is so heavily regulated because it's such a money machine for so many people here. Like, you can't trade anything outside the purview of the exchange. The regulations here are very strict. The money got to flow one way. This market is just being silly. Silly, come on. Do something. Get any kind of squeezy momentum. Something. Come on. Anything at all. Don't hate NASDAQ. Come on, get some run. Get some oomph. You've been pressing lower in the short squeeze. Come on, a little bit of oomph. Just a little bit. Give us just a little bit, a little taste. Oh, I've been waiting to make a decent trade today. Just move. Move, baby. Come on. Come on. Come on. The market is just absolutely picking up no momentum today. Is this the one? Is this the one? Let's go to half cap. Let's tap it. Come on. I can't complain. Gap fill and positive res. Can't complain. Can't complain. Come on, hit that MHP and break, and then give us the momentum. The gap fill can predict MHP break very often. Again, I'm counting my blessings here. I'm like, fingers crossed. Passing the 518 and run. That'd be a decent setup. Maybe a decent run on the last 2 hour candles here. But like I said, we were thrown into bear territory. This market is going to have a hard time picking up momentum today. My upside is going to be very short-lived. I'm going to get it and take it and walk away. This fucking day is ridiculous. This day was crazy, but we survived, didn't we, boys? Didn't we, boys and girls? All right, let's take it. I'll put some cash in my pocket. Let's go. Let's go. Come on, baby. Run it up. From here, 518 to 521. It's about 120 points on NASDAQ. That'd be 3,000 if I'm right, about 1,000 if I'm wrong. I like green candles. I cannot lie. But yeah, globally, there's just less strict rules everywhere else. The United States is a little over-regulated, but for good reasons. We have a rich history of fraud in this country, financial fraud, and people circumventing the system and stuff. So there's a lot of rules, and a lot of rules made to ensure that we trade inside the exchange's purview, and they make their money. They make their money. They get all their money off of us. Ooh, baby, ooh, 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 ooh. There goes my trade. Making that money. Let's get it. Put it in my pocket. Yeah. I like making money. candles that are more green. Let's go. Give me some more green, baby. Come on, let's go. Come on, just a little bit more. A little bit more. Let's get 2K on the account. Come on. Come on, fill that gap. I don't hate it. Cool. I mean, I don't hate it. We trade right back up to half gap and call. Let's close out. Whatever. I'm cool with it. That was good. Not a terrible setup. If you open a bull zone, there's a 90% chance of closing that same bull zone. It's under ideal conditions is 90%. Ideal conditions requires the greater market to be on your side, as well as all these lights, yellow and green. We've observed when obviously non-ideal conditions and markets are rational, we've observed that it's roughly closer to 60 to 70%. So the zone rule is not as strong when you're a non-ideal condition. Right? That's how that works. That was a fun trade. That was good. Oh, I like that one. That one made me happy. Oh man, market is crazy right now. Crazy right now. All over the place. Volatility is so hard to trade. Got to get in, got to get out. Can't overdo it. S&P back above DD bands. Let's watch S&P really quick. Ooh, S&P, my first love of life. Gotta love it. Gotta love it. Come on, S&P, breaking them DDs. What are we gonna do? That's why I don't short. As I told you guys, why I don't short against this. Even though everything's bad, you know, all my setups short to go. I teach you guys this. Why I didn't short? Because it's short lived. You know the rules, baby. Who's texting me and why? Oh. Doc. Come on, S&P. Let's see if we get the run. Let's see if we get the good rip. Bull zone rip. MHP test. I'm now going long. Remember, MHP resilience. We don't fight against that. This is what I told you all. Did I tell you guys this all morning? Where's a good place to short? I go, that's the only place to short, but I still don't short. I still don't short. I still don't short. Everything's got to line up to short. I can say that's on blue in the face, and at some point you guys are going to listen to me. Like I said, it still wants to get up there because of this yellow line. It's the perfect time. Again, the shorts are short-lived. You just got to keep that in mind. Doesn't mean it's not a good short. It just doesn't mean that it's going to crash. Continual crash today. News in 2 minutes. Why is S&P my first love and not NASDAQ? S&P hurts me less. It never breaks my heart. NASDAQ is an abusive lover. NASDAQ likes to hit you and tell you it's your fault. I'm doing this for your own good. That's NASDAQ. NASDAQ's a mean machine. S&P's gentle. It's a gentle lover. You can caress it. It's nice. It's smooth. It's clean. It's slow. It's palatable. NASDAQ, they call it the spastic for a reason, because it's a spastic nightmare. Let's tap on MHP. Let's hit the tap. I take this trade every single time. Dare I, just for fun? Why not? Just for fun, for funsies. Oh, why did I get two? Okay, it's an S&P. That's fine. Come on. Let's go. We'll retrace. 6016 today. I've made $11,000, $12,000 in my ETF account. Roughly 60 across the apexes, up or down. I haven't really gone up or down since we opened. I made a little bit and lost a little bit and lost a little bit and made a little bit. It's like, okay. I want to get 100. I want to get 100 across the board. I'll show you the picture when I'm done. Wish me luck. Wish me luck. Wish me luck, boys. Things are not the best today. This market is crazy. Fingers are crossed. Why is this market so crazy today? This is some nightmarishly awesome volatility. I usually don't trade in volatility. You guys know the rule. I like gentle, calm, easy, predictable markets. Volatility like this, where you're up or down thousands of bucks every 5 or 10 minutes, is not what I do to sustain my livelihood. in life. This is like gamble trading, and it's very hard to do, and it's very hard to stomach. It's like watching your account move up or down as quick as it does is not something that really anybody should like, commit to. Volatile days like this are better off just kind of like, trading very small micros, nothing big. Like I said, I'm only putting a contract or two. I'm not really going super heavy on this. So yeah. Just put something small on the table. You made 625 self-funded. Chris, let's go, baby. Let's go. Ping pong to the morning spy high. Yep. Yep. But here's the thing. Here, right here. It might take 2 days to get there. That's the problem. Now again, it might do this again. Do this again. This is what these kind of days are like. These kind of days really suck most of the time. You can't just normally like drop a position and hold it for the whole day. You got to play the volatility. So but that's it. I feel like from there we sell. I feel like that's the top. I don't feel like we rally from here. I feel like anything that gets close to that is done. And again, we're outside of DE band, so the market is just not, it doesn't play well here. Like I said, right now I'm just spec gambling. I'm not like, I wouldn't be doing anything here at all as a trader if I was really serious about not trying to put some numbers on the board. Like that's just for the show. Right now is like, I would just rather just wake up, take my profit and like leave today alone. There's not a lot of good trading setups. It's volatile. It's nuts. I'm having to trade with really small positions. Right now I'm trying to get 20K on my ETF. That's what I want. It'd be nice to get a 20K profit in just one account. That'd be good. I bought off of here. I longed off of MHP right here. What you learn in your journeys, you don't bet right. Your emotions are different from someone else's. I can't stomach seeing a big number red. I need the size of fuck down. It's not a terrible idea, man. I mean, that's not a horrible idea. So this is my current profit in ETF. Current. Now I'm in a position long. So this is NASDAQ versus S&P. It's 11,800 for the day. So far. If it runs to target, I'll get 20. Maybe let me do the calc again. 50, what is it? 86 to 16. 30 points. The S&P. 4,500 on top of that. Okay, I'll get 16.3 for the day. Is my mic fairly low? No, I'm coughing up like gallons of mucus because I got the flu. It's just Matt is low. Matt's low on energy. Matt's low on everything. Matt's injured. Oh, I didn't get my eggies. Hold on. Doc with the win. Can't complain. Always bring me the eggies. Problem with prop firms is the volatility can stop you out a lot. Hit your drawdowns and stuff. You gotta trade volatile days like this with micros. Oh, that was nasty. There's internal DoorDash. Oh, yeah. I lucked out with this one. She's making me breakfast today. Ah. EOSYD. Eggs outside your door. That sounds like a nursery rhyme or like a child song. Everyone clap your hands. Eggs outside your door. Everyone stomp your feet. Bacon outside your door. I should write children's shows for like PBS. Everyone spin around. Toast outside your door. And that's how we get our breakfast outside our door. By the way, don't steal my idea. It's a great idea. It's a song Barney would sing. All right, let's go. And bullseye break. I know, and volatility is hateful. Like, okay, again, why shorting? I don't like to take short off of here when MRES is greater than 0 because it likes to pop above. Again, 90% of days under ideal conditions will stay up here. It doesn't mean it's not going to try to sell. Trust me, I'm not long in the fort here. 2 contracts. The R&R is great on this trade. Here's a stop. Here's the run, basically. We're going to impact red line 6016. Again. Yeah, be careful on this one. I'm just putting a couple pennies on the table, nothing big. They're always cold by the time I get them. They're always cold. I forget about it since I've been sick lately. I'm like, oh, I got eggs outside the door. This has not been a fun trading day. Just, if you guys are curious from my perspective, all the years I've been doing this, this is not a fun trading day. I know I made some stuff, This is not fun. The amount of movement you get, 60 points of volatility outside of DD bands, breaking things, wicks. This is not, I don't consider this fun trading. It's not that fun. It's hard trading. And it's okay. I'm looking for this to at least retrace to here. Call it a day. I don't know if we get it today, but I think we might get in the overnight. That's the one thing I hate about this setup. It's all the signs are bearish. The market is not doing so well since yesterday. No bueno. Oops. So, like I said, I'm still hanging on to that long. Not a lot of movement here. And I don't normally trade outside of DD bands either. It's usually a no trade. You guys know the rule here. This is a gamble, 100% of a gamble. Like there's no reason to do anything from here. 84% of days close outside of the band. 96% of days close inside of the band. There's all conditions. Under ideal conditions, this is roughly 90% same side close or not ideal. We don't really know the numbers. MHP breaks are rare. And under its own condition, we'll still give it credit, and we'll say like not close to 90, but we'll just give it that hard credit here. So the market is really much pressing with two different probabilities, right? One is lifting this way, one is shoving it this way. That's why it's kind of in between these two things. We open in bull zone. It's very likely we close in bull zone. However, we're going to give that credit to be 70% because we're non-ideal. The difference with that is that any bull zone is also counted. So it's either there or there. Okay. So 30% that we end up inside of here. So the issue is that the market is likely to end up in one of two places today, and I'm betting on one of them. The market's either going to end up here on the 4% and 70%, or it's going to end up here on the 10% and 70%. There really is no... Let me do it the same way. Right? 10%. It's too low probability moves and it's volatile, so it's going to swing really hard one way or the other. I'm going to draw this with the colors so you guys can see them. % of days will close above these bands here. And 96% of days will close below those bands there. Which means high probability zone is right here. Low probability zones are there. High probability zone is there at 70. High probability zone there at 70. The market will avoid here, again, like I'm drawing this, okay? The market will avoid closing here. It will pick a side and it will be violent. Avoid. It will either here, the high probability. Are y'all all watching this? Or here with the high probability, close by the end of the day. This is the zone that it hates being in. As you can see, it's trying to get in one of these bull zones to match the stocks. This is the trick. The bull zone, open and close. Any bull zone qualifies. So it's not just the same bull zone, it's any bull zone. Because this S&P needs to be comfortable in a positive gamma and delta hedging environment. Whereas as it gets down to here, it's going to get positive delta hedging. As it goes here, it's going to get positive delta hedging. In the middle, it's getting a bunch of chop between the two bull zones. So since it's a 30% probability in the middle here, right, we're giving bull zone, same side open and close, 70% because of non-ideal. It's usually we say 90%, but it's non-ideal. So it's under certain conditions like hedge pressure breaks and such, it's closer to 70% non-ideal. So a bull zone close is roughly 70%, or give or take 60 to 70. We just say 70. This is my opinion. Don't trade off of this. Bear zone close is the least likely spot. So inside of here, roughly 30% in a mean reversion or bear zone close. So does everyone see this? No trade here. It's not going to, market's not going to want to close here. It's going to want to pick a side and stick with it. Mark my words on this one. With the DD bands are an exploit of the CME's margin requirements. It's one of the things we created that exploits the margin principle. CME created an equation that tells you the expected range of futures. You never knew you had an indicator that could tell you that. The expected range of futures is the most important thing. It's so important that yesterday it helped me avoid a crash. DD band is a high probability pivoting zone. that it's a current. You go to our platform at Rocket Security. You guys need to subscribe to our stuff if you need these numbers. That's why we make this. It's the best tools for futures traders. It's an emergency thing. 40 points for the S&P. It's 40 points above, and it changes when margin requirements change. So 40 points above or below yesterday's close in futures. At the band, it is a span probability such that 96% of market days will stay stable and close inside of this band. Only 4% break to the upside. And so there's two bands. It's actually 88% in the middle, 4 up, 8 down. So we're at the upper band now. So 88 plus 8 is 96. So these are all the probabilities from our back test. So right now it's it's high probability, as you see the overlap. The highest probability on the chart is this, which is kind of funny. We're kind of sitting here now. Market wants to be above here, wants to be below here at the same time. Then loves this little spot. That's how our probabilities are working. It's a low probability break, low probability break. So actually, let me be more correct. This is the only zone that makes sense. This, oops, sorry. What am I doing here? So here, this is a no-go, this one, and this is a no-go. So this is just like noise. There is like the highest, actually, I didn't even think of what the highest probability is here. It's roughly 90 plus. So these percentages are where we'll close for the day. These are the odds. Individual odds. It's not like stacked. I haven't done the full math to balance the spectrum to 100, but you see what I'm saying? These are the individual probabilities. So the highest probability is to be exactly where we are right now. That's where the market is most comfortable. See, again, he keeps squeezing me on this trade. I hate it. I'm not going to get a good break on this one. So it's going to pick a zone very quick. I keep trying to bet that we get to this bull zone, but it's not. It's not moving. The volatility is pretty gross. Numbers are still good to not reject on this one, but I keep taking little bites at this and keep taking little losses. I'm not going to get close to the goal I want. I just want some momentum by the end of the day. That's all I care about. End of the day momentum. It's not 90% we close above. It's 90% we close on the same side we open. That's the back test. So we open above. 90% of days close above, but you have to take it with a grain of salt. It's the back test, right? So I would never long anything. There's a rule, is that when you break MHP to the other side, the market's irrational. When markets become irrational, all your probabilities are shot. It's not, the odds are no longer as good anymore. Like 90% bullstone becomes like 70%. It's much less. So when you break MHP, instead of betting that it goes above, there's a rule that if you break MHP by more than one strike distance, everyone here usually sits out. Market's irrational or chases the short off of the bounce. Like today, short traders are trying to short off of this. Long traders are trying to long off of this. So I don't normally, when you break into the low probability zone, awesome cap, zero sum cap, I don't like to be in a trade. My secret is I don't like to be in a trade. in a low probability zone. This is a low probability zone. I don't like to be in the trade period, shorting or longing. I kind of want it to be up here. I'm not taking a bet that we go up there. I'm taking a bet that we hold here, and then I'm like debating stopping or not. So when it's down in here, nobody should ever take a bet. And again, it's not investment advice, but nobody should ever take a bet that it does this. Never on MHP break. It's the first safety net to get out of the way. I'm longing at that level to bet that it holds. It's different. That makes sense? I'm not overly scared of taking a little bit of drawdown, but I've got a clean stop, 40 points or 10 points lower on S&P, which is roughly $1,000 of drawdown. I'm trading 2 E-minis right now. So you guys see how cool our stats are? The highest probable zone is right here. This is where it's the most comfortable and balanced. That's the funniest part. The volatility is like glued to this little spot. It kisses it. It's like a little sticky spot in the market. Again, if we break here and jump the bull zone, then we're good. There's momentum will pick up. If I get this and it bounces, and momentum picks up for the course of the day, it'll hit my target and it will sell very hard. So be very careful. 60-16 it doesn't go any higher than that. Every bone in my body is telling me we're not going to get that momentum today. I don't know. I kind of don't like anything that I'm staring at. I think I'm going to call it, to be honest. I'm just going to call everything. I'm tired. I want to go rest. I'm going to get out. I'm done. Do you pay tax if you receive UK prop payouts? I don't know how the UK works. I'm the wrong person to ask there. So anyways, the market's going to choose one side or the other. I'm going to stay on the sidelines and kind of let it do its thing. Gonna rest today. I'm still sicky. Matt Weeks has an answer for you. Thanks for tuning in, guys. Don't forget to sub to the channel. Don't forget, I might do my Zoom call today at 2:30. I don't have much of a voice to teach for like 2 or 3 straight hours, but I'm going to try. We're doing our 20 days profitability mindset masterclass. We teach betting tricks. How I do all the odds. This is what we'll teach you. You guys want to learn the odds of the market? You'll crush it in your elite trader funding or your other Apex or whatever you're doing accounts. You're having a hard time because you have no direction in the market. And you want to take a class to get a little more information. That's what we do. Our community, we're a company of 20 people. I'm the CEO. I built this trading platform that you see on my screen. I'm not just a live streaming futures trader, but I also am the CEO of a corporation. They have employees of a huge company, huge group, huge community. 6,000 active paid members in the community, tons of free ones. And everybody here is a trader, mostly a futures trader. We are the largest futures trading paid organization on the planet by memberships alone. An active user base. Futures only. There's a reason we're getting so big. A lot of people are starting to just discover us. But the idea that, futures trading is more available to people, it's growing like wildfire. Appreciate you guys stopping by. We used to give our classes away as part of our $200 a month membership. Now we have specials going on, half price first month for all the Rocket Scooter platform and tools. You guys can check it out for first month, 3 days, full money back. It's only $100 just to get your feet wet. If you want the classes only, we made a little special value. We made it only $20 because we know you want to learn something. That's the price of a book. It's 20 days, $20, and you can come to the Zoom calls, which are twice a day. And they're training. They're not just trading. A little different environment there. Well, we did it for Black Friday. It was wildly popular, so we brought it back and made it permanent. You guys can check out the courses. It's only $20. Go to rocket.place/Matt, and you'll see all the stuff that we have. Like I said, the Zoom calls, yesterday we avoided the market crash because of one technique that we taught in our Zoom calls. Risk interval was one of the most important classes, and we had it last week before I got sick. It just so happened we had a catalyst move, which we talk about all the time. It's one of the biggest sit-out rules we have. And I avoided a 200-point collapse in the stock market, in the S&P, 3%. I didn't lose anything when it started crashing. It took a small loss and walked away. I'm so happy that I did. So guys, join in. The Zoom calls are recorded. You can watch them at any point in time, but they're also live. When we do them live, you can ask questions. We share with you all the probabilities and all the secrets of what it is we built and why and how, what we exploit, what it's all about. You won't be disappointed. All right, check